Audible, visible? Okay. Where did we stop? What were we doing? A quick revision of the last class. Okay, GDP, GNP, NDP, and NP. Okay, all of you understood. Any questions? Anybody who made an effort to go back? Yeah. Were you in classroom 1? Okay. So what is GDP? Total final value of produced. What is India's GDP? What is India's GDP? The quantity, amount. How much value do we produce in India of the final goods and services in 1 year? Like 2022, 2023, let's take. $3.8 trillion. Okay. How much does China produce?
13.
Okay. Around, let's take average. See, we say India is the 4th largest economy in the world. Okay. We'll come to nominal, real, everything. What is that subtle difference and all? But just have an idea, not a part of the examination, but still just an idea. US trades somewhere around 33 to 35 trillion dollars. Okay. China is around 12 to 15 trillion dollars. So what's happening in China recently? What's happening in India? Do we have the prices going up or the prices going down in India? Up. This is the case everywhere in the world. The entire world is seeing something called as inflation. We'll come to it. We'll come to a chapter called inflation. But before that, just know that the entire world post-COVID is going through a phase of inflation where the prices are high, except China. China is going through a phase called deflation. We'll come to this also. Just know that why I'm telling you all this, because China was in news for this reason. If at all you come across this before we start inflation chapter, where Chinese economy is going through deflation, just know that China is acting in a reverse way, vice versa to the entire world. Entire world is seeing an inflationary trend. China is seeing a deflationary trend. So have this basic understanding, and then if you go through the editorial, you'll be in a position to understand at least 50% of whatever is mentioned in the editorial. Okay. Now, the next, what is the next subtopic in the index that we've talked about? Difference between factor cost, basic price, market price. Okay. Factor cost, make it in a chronological order. Factor cost first, basic price, and then market price. Okay. Let's take again iPhone. I think nobody would have used these examples the way we are using it in the class. Okay. Let's take iPhone 13 for that matter. The cost of the product, 70,000 rupees around. Now maybe it would be less. Okay, let's take. whenever it was released or whenever there was a hype. 70,000 rupees. What are all included in this 70,000 rupees that you will be paying to buy this phone? What are all will be included? Tax. Okay. First, let's take first tax is the later stage of the production. Labor. Okay, agreed. Labor. Then what else? Intermediary goods cost. Okay. Materials required for the production. Okay, land. Okay, rent for the land. Customs if you're importing something. Okay, customs. Okay, we'll include customs and taxes. What else? Is Apple doing it for free? Where is the profit there? Obviously, no, profit should be included. Clear? Entrepreneurship, profit, depreciation of the machines that they're using, depreciation. Anything else? So, transportation. Okay, transit. Transportation cost. Agreed. So, what I'm trying to tell you is this 70,000 rupees that you are paying to buy any product will include all these. If we break these items into 3 different categories and try to understand the value addition is factor cost, basic price, market price. Simple. Understood? It includes all these. Clear? We'll try to classify them into 3 broad headings: factor cost, basic price, and the market price. And we'll get to understand what are the factors under these will be under factor cost, what will be added for the basic price, what will be for the market price. Market price is the 70,000 rupees that we have. So from the factor cost, which will be somewhere around 50,000 rupees, we'll have to reach market price, that is 70,000 rupees. What will be included, what will be excluded. Okay, now one more. If the Indian government wants all of you to buy an iPhone and the Apple says it is 70,000 rupees, which some of us can't afford. So what would the government do? If government wants to do it, what would the government do? Subsidy. Government will say, I'll give you 50,000 rupees subsidy. Don't be happy. We're just talking about an example. If government says 50,000 rupees, I'm giving you a subsidy to buy an iPhone, how much will you have to pay? 20,000. Correct? Yes. So if you add this subsidy plus the amount that you're paying, you will get the final price of the product. Everybody understood? So with this information, we'll move forward. The first subheading, factor cost. Okay. What are the factors of production? Land, labor, capital, entrepreneurship. What are factor incomes? Factor costs. Labor, wages, land, rent, capital, interest, entrepreneurship, profit. Add all these, which is required in the process of manufacturing, and that will give you the factor cost. Simple. See, the term itself says adding the cost. Factor cost, basic price, market price. So add all the factors of production that is involved in the process of manufacturing a product. That will give you factor cost. Okay, now let's say employees are recruited, rent has been paid, the capital has been taken, interest has also been paid, and now we have the profit that also been taken. Okay, it's accounted. For a firm, the profit is also accounted. And finally, in the assembly line, the phone is ready. The iPhone 13 is ready in the assembly line. It has not left the factory. It is still in the factory, but all these things are taken care of. Yes, understood till here? This is something called as factor cost. Now, for example, in order to manufacture such a produce or any product for that matter, can you do it for free? Or you should take some licensing fees with the government, or you should start applying to some government ministry because you will be starting a firm like this, correct? So all those documentations, all those taxes that you will be paying in this process of the entire manufacturing are called as production taxes. Production taxes. Like for example, see, rent is different and paying the land revenue is different. Rent you will be paying to the owner. Land revenue you will be paying to the government. Land revenue, stamp duty, clear? So you will have such small taxes that you will have to pay if you have set up such a factory in India. Correct? Yes. So for example, let's take, after all adding these factors of production, the cost of the product is somewhere around 50,000 rupees. This is the cost of the product. Correct? And even this production tax also you are paying to the government. Should you add this production tax or minus this production tax from the factor cost? Add, because that is also a thing that is going away from the firm. Okay, you will have to add. So 50,000, that is factor cost plus production taxes. Correct? Yes. Now the government says, see, you have come from USA, you could have started a manufacturing unit in California itself, but what did you do? You were very utilitarian, you were very good, you wanted to help the people of India, you wanted to create employment, you have done good thing for us, you have given us more dollars into our foreign exchange market, clear? So we appreciate it. So what will we do? We'll give you some subsidies. Okay, we'll give you some relaxations. If at all you had to pay a tax of 100 rupees, we'll give you a subsidy. Don't pay, just pay 50 rupees. So that is called as production subsidy. Correct? So now, should you add this production subsidy or subtract it? Minus. Because this will not be a part of the whole process because the government is giving you already. Minus production subsidy. Is everybody following? Yes? No? Even if I see one head nodding no, then I'll tell this again. Yes? No? Understood factor cost? Yes, 50,000 rupees. Still here, everyone is fine? Yes? Now, for example, land revenue, let's take. Or property tax. You'll be paying property tax for your property somewhere here. Or professional tax. Correct? So this professional tax is something that you will have to pay to the government. In the manufacturing of this product also, if the Apple has set up a manufacturing unit in Jayanagar 4th block, Jayanagar 4th block bus stop, yes, all of you have seen, there's a huge manufacturing unit that the Apple has set up, let's assume. Okay, so for this building, Apple is paying the rent that we have included in the factor cost. That's there, but the land revenue is paying to the government. Should you add that or you should not add? If you don't add it, then you will be at the loss. You're not incurring the expenditure that you are doing for the production. Yes, understood? So that's why we've added the production taxes that you'll be paying to the government. And if the government is giving you something in return, some relaxation in the form of any subsidy, that's what? If the cost of the product is 70,000, each product, the government says, I am not rich enough to give you subsidy on each iPhone. So what will I do? Total amount of taxes that you will be paying, total amount of subsidies per year I'll give you. I'll give you this much amount every year. It doesn't depend upon the product, how many you prepare. Just because you've come over from California, you've set up a manufacturing unit here, you're giving employment to Indians youths here, so I'm giving you this money. Okay, so because the government is giving that money already to you, we are subtracting it from the total cost in the form of production subsidies. Understood now? So this factor cost plus production tax minus production subsidy is called as basic prices. Understood? Yes. Okay, now what is the next one? Market price. See, where is the product now? Where is the iPhone? Has it come to the market? Not yet. It is still in the factory itself. Before it comes out of the factory only, we are paying all these and we're calculating the factor cost and the basic price. Now the product enters the market. Before it can come out of the factory, don't you think the Apple should pay GST? Will GST depend upon the entire production or it depends on the product? Everyone. Even if you buy one piece of an iPhone, you will have to pay GST, 18%, 18%. Even if you buy 10 iPhones, then you will have to pay 18% on all 10 products. Yes. So which means there are something called as product taxes. Correct? Basic prices. We have taken the basic price. We are adding the product taxes and not the production taxes. Production taxes already be there. Once the product enters the market, every product will have to pay the tax. That is product tax. And if the government says, if you keep the market price at 70,000, I want every Indians to have an iPhone. Okay, so what will I do? I'll give you a subsidy of 50,000 rupees on each iPhone. I don't mind you prepare 1,000 iPhones or 1 lakh iPhones in your factory. That's none of my business. What I am doing is giving you a subsidy of 50,000 rupees on every iPhone you produce, because I want every Indians to have an iPhone. Yes. So minus product subsidy. This will give us market price. Two equations. Basic price is equal to factor cost plus production taxes minus production subsidies. Okay, market price is equal to basic prices plus product taxes minus product subsidies. So here you will have to understand what is the difference between production tax and product tax. What is production subsidy and product subsidy? Production tax is on the entire value of production, the factory that you have set up. Product tax is on each product that you produce. You will not be paying GST on entire thing that you purchase. If you purchase one iPhone, one TV, one projector, okay, any other electronic goods, all these you will not be paying GST together. You'll have to pay GST for each and every product. That is a product tax. Understood? Everyone? Yes. Now let's do some substitutions. Write down the two equations. basic price is equal to factor cost plus production taxes minus production subsidy. Market price is equal to basic prices plus product tax minus product subsidy. Now, instead of this basic price here, can we substitute this? Do it. Factor cost plus production taxes minus production subsidy plus product tax minus product subsidy. No maths involved. Plus into minus, minus, minus into minus, plus. Nothing is involved here. We're just substituting it. Everybody are able to do this? Yes. Now, look at this. Production tax plus product tax. Is it an income tax that you're paying? No. Yes, no. No, it's not an income tax that you're paying. Factor cost, both these included production taxes plus product taxes. Both these. Can I club this and say that it's an indirect tax? I can say that. Adding the production tax and the product tax, both of them together collectively, I can say those are the indirect taxes because it includes GST there. I can say that both of them are indirect taxes. Production subsidy plus product subsidy together, can I say that net subsidy or just a subsidy? So the total formula to calculate, see, you will not have any numericals here. It is just the concept that you will have to understand. The formula for the market price will be factor cost plus indirect taxes minus subsidies. This is the third equation to remember. See, do not memorize. If you memorize, then you will not understand. You don't have to memorize. Nobody will ask you to write this equation in the exam. I'm being very honest. You can see last 10 years question paper. Nowhere UPSC has asked you to write this equation. Not only this equation, the other two equations also. UPSC will not ask you to write the equations. From the equations, UPSC will derive a question. Okay. So if you understand the equation, you can answer the question. If you memorize the equation, you can write the equation there, but you can't understand what the question asks. That becomes difficult. Yes? Any questions? Yes, no? We'll move forward. Yes? Okay. Next. What is the next topic? Current prices and constant prices. Let's not go to the iPhone example. Let's come to a simple example of an egg. Okay, most of all of you eat egg. 2015, 2018, 2021, 2024. Okay. Don't make this chart. This is just for your understanding. Okay. What was the price of egg in the year 2015? Let's take hypothetical example. The price of the product was 2 rupees. 2018 it was 3 rupees. 2021 it was 4 rupees. 2024 it will be 8 rupees. Okay. Now hypothetically imagine egg is the only product that the entire country is producing. Just imagine, for the sake of understanding this concept, just imagine egg is the only product that we are producing. In the year 2015, we have produced 10 eggs. The entire country has produced 10 eggs. 2018, we have produced 10 eggs. 21, we produced 12. 24, we produced 50. What is the GDP of the country? 10 into 2, 20 rupees is the GDP. 30 rupees, 48. 15.8. How much? 120. Correct? Easy. Understood till here? Now, compare 2015 and 2018. Did the GDP grow? What is the percentage of growth of GDP? Don't tell 10%. The entire quantity that has grown by 10. Did it grow or not? It grew. Everyone? Any questions with this? Because it was 20 and it became 30. Yes, no. Everyone? Between these 2 years, 15 and 18, were there any new factories that were set up to manufacture eggs? Yes, no. Were there any new factories that were set up to manufacture eggs? Why no? Quantity is the same. If there is no new factory that was set up to manufacture eggs, was the new employment created? New employment? If there is no new factory, where will the new employment be created? Employment was not created? Yes. If the employment is not created, then the extra income will not be there. The laborers will not get salary. Yes. But the GDP grew. How? Just because of the prices. Now, if I say from 2015, when Narendra Modi took over as the India's Prime Minister, till 2018, when he was about to complete his first term, India's GDP grew exponentially from 20 to 30 because of the Prime Minister. Will it be true? I'll repeat. If we say 2014, Narendra Modi took over as the Prime Minister, he carried out lot many good things, and every youth in India got employment. Everybody have a lot of money. India is progressing like anything, and India's GDP grew from 20 to 30. Will it be a correct statement to make? Not at all, because the number of the production that you're having is constant. If you want to get the actual, worth of an economy, is it fine if you do like this? Take these prices which are changing, and start calculating the GDP, will you get the actual amount? Will you get the real growth? No, we won't. So what do? So this phenomena of calculating the GDP from the current prices. These are the current price. 2021 current price, 2024 current price 8, 2018 current price 3. Correct? So this way of calculating the GDP or the net worth of the country, taking the exact price at that point of time into account, is called as current prices. Simple. Again, you understood this 2, 3, 4, 8. The prices is increasing. Why is prices are increasing? Because the demand is more. Okay, inflation. That's there. If you take the GDP like this, the product, the quantity of the production that's happening with the that year prices. If you take the GDP into account, considering the product or the quantity of the product with that year ka prices which are in the market, and you find out the net worth of the country, then you call it as current prices. What is the difficulty with the current prices? What is the negative of the current prices? It will not reflect the actual growth. See, here there is an actual growth from 12 to 15. Okay, just 3. But look at this, 48 to 120. Exponential growth just for 3 products that you have increased in 3 years. So this is the problem with respect to the current prices. You will understand this better when we deal with inflation, because we'll come back to this and understand that the current prices will take into account the rise in the price, that is also called as inflation. But what is this constant price? Instead of 3 rupees here, what if I maintain the same price throughout to calculate the GDP? Okay, instead of 4, I'll take 2. Instead of 8, I'll take 2. Now what is the new number? This will be 20. This will be 20, 24, 30. Don't you think this number is more realistic than the above? This is called as constant prices. Because you take 1 as a base year, you take 1 year as a base year, and throughout the calculation, you maintain the price of the base year. If at all the quantity changes, it gets reflected in the GDP. This is the real quantity that we aspire for. So this is the difference between current prices and constant prices. So tell me, which is good? Constant prices are always good to get to know the reality. But if you want to give it a hype, before a movie gets released, you will have teaser, you will have trailer, you will have an audio launch. Everything is hype. Okay. So if you want to have such a hype, then what is good? Current prices are good. Because the quantity, the value, look at the value here, look at the value here. If you take the current prices into account, the value will be so great. If you take constant prices into account, you will have the real value. This is a very basic concept. We will be extrapolating this to multiple other concepts. You will have the real GDP, you will have the nominal GDP. We'll have the real inflation, we'll have the nominal inflation. If you understand this, then all that will become easy. Name itself suggests current, today, current affairs, what's happening today. So if you take current prices into account and calculate GDP, it is current prices. Constant, something that is stagnant. That's same throughout, it will be constant. Okay, it's not like X, Y, Z, but that we have in algebra. Okay, constant. So if you take the constant prices into account of one base year to calculate the GDP, then it will be called as constant prices. Don't confuse this with market prices. Factor cost, basic price, market price is one thing. Current prices and constant prices is one thing. Everyone following, sleeping, too much mathematics? No. We'll come to it. I'll tell you it in inflation chapter. Usually, there is an institute called as National Statistical Office, NSO. Okay, National Statistical Office. So this office, the major work of this office is to come out with all this data. Okay, so what do they do? Usually what do they do is they take the most stable year in the economy, the most stable year, not like 2019, 2020, 2021 because there was COVID. You don't take that as base year. Base year is something that is very usual, okay, very stable throughout the year. It should be stable, the prices should be stable, you should not have any externalities, too much of drought, not a too much of flood, or a hyper yield. Even that should not be there. It should be stable. So as of now, for all our GDP calculations, the base year that we take is 2012. Okay, so before 2014, 2015, before Narendra Modi became the Prime Minister, the base year was 2004, 2005. This was the base year. As of now, as soon as the Prime Minister came out, we became the Prime Minister, changed the base year to 2012 and 2013 because they consider it to be the most stable years. Okay, so if at all 10 years down the line, 2029, 2030, we're talking about, maybe our base year would become 2024 or 2023. Maybe. So that can be changed. Now, tell me. So 2014, let's take. The price was 1 rupee. 2014, the price was 1 rupee. If you take 2014 as the base year and calculate, what happens to the GDP? If you take 2014 as the base year, okay, now I'll take 1 as the base year. What happens to the new number? 10, 10, 12, 15. What is the difference here? If you change the base year to any year ahead, you can get a better value of a GDP. Yes, this is what Narendra Modi did. The base year was 2004, 2005. As soon as he came in, he made it 2012 and 13. So a gap of 8 to 9 years in between. So the GDP expanded. Did the GDP expand in real? No. Just because of the calculation, GDP expanded. Understood? Yes. Suppose, take 2013, where the price of an egg was 0.5 rupees, 50 paisa. Now, what is the real number? You take 0.5, you take 0.5, here also it is 0.5, here also it is 0.5. What is the new number? 5, 5, 6, 7.5. Understood? See, for a government to come out in the public and say that the GDP has expanded, what would we would think? Okay, he's doing a lot of good things. But such mathematical calculations and technicalities we would overlook because we are not trained in it. Correct? Now, if at all in the newspaper there is an article which says that the calculation was done with the current prices, with the constant prices, Indian GDP has not seen a significant rise. I'll repeat. If the newspaper heading says, with the current prices, Indian GDP is expanding, but with respect to the constant prices, it's not seeing a significant growth. If at all this is a statement, will you be able to understand this? What does it mean? The production is almost constant or it is a negligible rise, but just because the prices are rising, you have an exponential growth. And what would the Prime Minister say? Indian GDP is, okay, with due respects to all political parties and also the Prime Minister, I'm just giving an example so that you can connect to it. Yes, understood. Now, okay, what is the next topic? Before that, make a note of this also, because there was a question. An office called NSO, National Statistical Office. See, what happened was actually before 2018, before 2019, before Modi 2.0, Modi 2.0, 2019, second term, sequel. Okay. So before, after the 2019, there were actually two organizations. One was called as CSSO and NSSO. CSO and NSSO. National Sample Survey Organization, Central Statistical Organization. Two offices. Okay. So both of them were merged in the year 2019 to form NSO. Both of them were merged to form an single organization called as NSO. And NSO works under a ministry called as MOSPI. What is MOSPI? Ministry of Statistics and Program Implementation. A possible prelims question. Okay, Ministry of Statistics and Program Implementation, MOSPI. So, who comes out, or which ministry comes out with the calculation of current prices, constant prices, and also the base year? Ministry. Which ministry? In the options, the first option will be Finance Ministry. Second option will be Revenue Department under the Finance Ministry. Third, Prime Minister's Office. Fourth option, MOSPI. Don't get carried away because of the finance. It is Ministry of Statistics and Program Implementation, which comes out, which the NSO under which it works. So NSO comes out with all this, and NSO works under the Ministry of MOSPI. Yes. So this completes one subtopic under the national income accounting. The most important one and a difficult one to understand is the methods of calculation of GDP. The next subtopic, methods of calculation of GDP. Okay. See, from the last 10 years, prelims question I'm talking about, there was a mains question on the same topic, exactly the same. Describe the methods used in the calculation of GDP. That was a mains question in 2021. Exactly the same. Whatever you will be writing in the notes, if you just reproduce the same in the mains exam, that would do justice to this particular question. Okay, but prelims, while I'm talking about, in the last 10 years, you just have twice this topic has been asked in the exam, and not to the detail that we will be studying. If UPSC is asking a question with a difficulty of 1, we'll be getting into the details of 5. Okay, what we'll be studying in the class will be in detail with respect to what UPSC would ask. And also, if you can go through Nathan Singhania, you would know you will not have this topic in this detail at all. They will just brush it over. Okay, so to be on the safer side, we'll have some discussion about this. See, we'll have 3 methods of calculating GDP. 3 methods of calculating. First, make a note of these 3. Then we'll go into the detail of each. First one, expenditure method. First one, expenditure method. What is expenditure? Kharcha that you do. Expenditure. Second, value added method. Value added method. Third, income method. Okay. Income method. First one, expenditure method. First one, expenditure method. Tell me, who are the people who spend so much? All of us? Individuals? So can we consider people who spend as households? These are the people who spend. Okay? To get what? Why do you spend? To purchase. Okay, satisfaction. Agreed. Okay. Purchase goods. You want to buy something. That's the reason why you spend. Okay. So the money that you give, finally it reaches whom? The money, the entrepreneur, which means it reaches the industry. From industry, it will again come back. That's a different story. Okay, so this is one cycle. Households, what do households give? Money or spend to buy goods from the industry. Making sense? Can you say every rupee that you're spending, you're getting something from the industry? You're buying something? Yes. And if you equate all the money that is being spent by everyone in the country, will that be equal to the amount of goods produced by the industry? For example, let's say industry has manufactured 100 pencils. You have spent 1 rupee and bought 1 pencil. Like that, there are 100 people in the country. All the 100 have spent 1 rupee and bought 100 pencils. So if you sum the money spent by every individual in a country to buy goods and services, clear? Will that be equal to the number of goods and services produced by the industry? It will be equal. Spending or expenditure is equal to the goods manufactured. Because in this, we are excluding imports. GDP doesn't include imports. Yes, this is the definition of GDP. All the final value of goods and services manufactured in the country in 1 year. Understood? No. Everyone? See, if you say yes, then it's like a confidence. Okay, they've understood, I can move forward. If you are in dilemma 50-50, half have understood, half have not, then even I'll be in dilemma what to do. Yes or no? Yes. Yes? Okay. Keep this aside. Now, for this industry, who are the people who go and work? Where are laborers coming from? Households. Households are giving service to the industry. Correct? What is industry giving them in return? Wages. Making sense? Possible? So this is called, this entire setup is called as circular flow of money. Circular flow of money. Why is it circular? Households will go to the industry and work. Industry will give them wages as salary. They'll spend the same salary to buy the goods from the same industry. Money is just rotating in the system. This is called a circular flow of money. Circular flow of money. So you can write this as factor service wages as income. So now, if you add, now look at this. The expenditure that you were doing was equal to the goods that were produced. Where are you getting this expenditure from? Salary. So the salary that you're getting is equal to the expenditure that you're doing. Understood? The second one, if A is equal to B and A is equal to C, can we say that A is equal to B is equal to C? The expenditure that you're doing is equal to the goods that are produced. Understood? So this is expenditure method. If we add the summation of the entire expenditure that's happening in the country, that will give us the total GDP or the net worth of the nation in the expenditure method. So if at all it's asked in the exam, you have to write this diagram and explain it in pointers about the circular flow of money. Understood? Easy. If you find it difficult, then I'll give you a hack. Okay, what you can do is, if you've understood the concept and it's not making sense, okay, you're not satisfied with it, you think about an example. See, I would have given you an example of an iPhone or a pencil or a pen or an egg. You think about an example that will suit this scenario and try to understand. If you can't do that, then we'll have a discussion on this again. Any one topic. See, we'll finish this chapter today. Even if you're done with like 12 or 12:30, we'll end it up. So I'll give you a break. So take some time, sit here, read everything once. If you have questions, we'll discuss it here itself, and then we'll break for the day. We'll take a break for the day. Yes. Next, what is the second topic? Value added method. What is value addition? Value added. What is this value addition? Any example of this value addition that you can think of? Any example of such value addition? Don't you think you spending 3 hours here in the morning and 3 hours in the afternoon, after 8 to 10 months, will that be a value addition for you or not? Just wasting time. No value addition, because you're learning something. If we talk about goods through the assembly line, for example, let's say there is one firm which is just manufacturing ink. They're just manufacturing ink. Okay, and they're filling it in big bottles and they're selling it to one more company, okay, which is purifying it and packing it. Okay, it is packing. They are selling it to one more company which is manufacturing pens. Okay, so this pen manufacturing company is taking this ink, they're manufacturing a pen, they're mixing both and selling it in the name of Cello or Pilot, Luxor, any which brand. So from this manufacturing place to here, this is value addition. Okay, one more example. Let's consider a farmer. See, everything starts from the primary sector. Let's consider a farmer. He has grown wheat, okay, worth 500 rupees. What is the value addition here? Farmer has grown wheat worth 500 rupees. What is the value addition? What was there before growing wheat? Was there, okay, before that, was there any value? No, because the value was 0. From 0, he created a worth of wheat of 500. What is the value addition? 500 rupees. Understood? See, before the farmer actually grew wheat, what was there on the field? Empty, nothing, 0. What did he do? Bought seeds, sowed them, put some fertilizer, irrigated, pesticide, everything, and harvested. Now he is having this yield worth of 500 rupees. Okay, now there comes a company. Let's take Ashirwad. Heard of Ashirwad? Atta. Okay, they come over to this farmer and they say, see, we want to produce atta. Okay, so we want your wheat. They bought the wheat at 500. Okay, all the profit included. They bought the wheat for 500 and they crushed it and made atta out of it. And they started selling it at 800. What is the value addition? Everybody understood? Now, this Ashirwad atta was bought by the owner of Kalpavruksha here. Kalpavruksha is a restaurant nearby. Okay, he bought. And he wanted to make roti out of this. He bought atta for 800 rupees and all his labor, his rent, his profit, everything included, started selling roti at 1000 rupees. I know it is very expensive, but still, just for an example's sake, I'm talking about it. It's not one roti, okay? The entire value of rotis that he is manufacturing. What is the value addition? Okay, now, in the value addition method, the value that is being added in every group or every stage of manufacturing is added. So what is the total value in the value addition stage? 500 plus 300 plus 200. So it is 1000. Every stage of manufacturing, what is the value that would be added? Only that value addition is considered, and that is added throughout the assembly line, throughout the process of manufacturing. You add everything and you get a final value, that is value addition method. Now, understood till here? Everyone? If I give you food example, then probably you're in a better position to understand things. If I tell iPhone, Harrier, I didn't see the smiles on your face. Okay, from now on, I'll make sure. If I knew this before, then probably most of the examples would be food. Any foodie? How many foodies here? I go like exploring. Okay. Then I'll refrain from how many iPhone users? That is the reason why. Now I get the point. Okay, from now on, no iPhone example. Only wheat, roti, gobi, pani puri. We can take pani puri also as an example here for value addition method. We can do it. See, this person comes over. It is taken by a pani puri wala. Okay, then he adds aloo, some save, okay, some coriander, pani, everything, and start selling at 1000. Then it makes more sense. Okay, so okay, we'll do this from now on. Everybody understood this? Yesterday there was a question. I think you were the one who asked, like, what do we do with the imports? If we import something, manufacture a final product in India, will that be considered for the GDP or not? Yes. Remember the question? Yes. Harrier, tire. I told you that I gave you the example of MRF, not Michelin. Correct? Yes. See, now, if this value addition is happening in India, then you can take this. If you import, This value addition is not happening in India. So you'll have to exclude. Okay, so this is considered to be the most easiest and the most accurate way of calculating GDP. This is what Indian government also uses, value added method. Okay, so now tell me, in this entire value added process, if at all you go to Kalpavruksha and buy roti, you will get a receipt. You will get some bill. You will get a bill that will be accounted. What if the same 800 rupees atta is bought by a roadside bhaji wala who is making bhajis and bondas? Do you get receipt there? No. Okay. So he bought this 800, added value, sold you bhaji for 20 rupees, 3 or 4. That is not accounted for the GDP at all because you're not getting receipt. It's not getting accounted. Till where is it getting accounted? Till here, till Ashirwad. What happened to this atta after Ashirwad? Nobody knows. Okay, this is called as informal economy, Bhajiwala. Kalpavruksha is an formal economy. This is what the government is striving. Convert the informal sector to the formal sector so that these transactions will be taken into account. We'll get to know what happens for this atta of 800 rupees after it is sold. We'll have to get to know whether it is bought by you, household, whether it is bought by Kalpavruksha to market rotis, or whether it is bought by a bhajiwala to manufacture bhajis. The government should get to know. Government will get to know only if it is a part of the formal sector. If it's a form of the informal sector, then we won't get to know. If you go to Fresho downstairs, after you purchase 1 kg tomato, even if for 250 or 300 rupees, you will get a receipt. Same way you go to a roadside vegetable vendor, you won't get a receipt. So that transaction, that economic transaction is not accounted. So what government is trying to do is make this informal sector to the formal sector. Okay, in India it is very difficult. 1.42 billion people, 142 crore people, you won't know where they're transacting. Very hard to trace out. Okay. Next. If you have understood till here, very fine, no problem, then 60 to 70% of the difficulty is solved. All of you? Okay. Income method. Simple. Remember the circular flow of economy, circular flow of money. In that circular flow of money, where does the income come from? Okay, so the income or the wages, income or the wages was very much equal to the expenditure plus savings. You get income, you save something, you spend something. What did we take in the expenditure method? We took this. Okay, so this entire income included the salaries is income method. Simple way to understand. Okay, so when you have written expenditure method, make a note of one more equation. We have missed this equation. Expenditure method is equal to okay. C, write down this equation, then I'll tell you what it is. Plus I C plus I plus G plus X minus M. Write this under expenditure method. Okay, what is this? C plus I plus G plus X minus M. C, the consumer. The expenditure that we do, circular flow of money that we've talked about. So in that expenditure, whatever the expenditure that you do, part of consumer. Investment. Investment. Okay? You invest somewhere, you buy something, investment. That's also an expenditure. So for the investment, in the economic terms, we give a value, we give a term called as GFCF. It's called as gross. You will find this term in news. You will find this term in the newspaper most of the times. Gross fixed capital formation. GFCF stands for gross fixed capital formation. Nothing but investment. So if you find this term in the newspaper somewhere, gross fixed capital formation, make sure that it is investment. That's all. Nothing more. The term might look very complex, gross fixed capital formation, but it's nothing but investment. Okay. G, the expenditure done by the government. In the last class, we have seen what happens if the government start constructing an airport. Yes, remember yesterday's employment, income, again investment, again demand. So aggregate demand increases. So that is government expenditure. What is X? Is an export minus I is an import. Okay, you can write it as M or I. That is import. Don't confuse with this I with that I. Okay, so when you add all these, C plus I, that is consumer expenditure, plus the investment that a consumer is doing, plus government expenditure, plus X minus M, export minus import, which can be collectively called as net exports. Okay, so you get a term, you get a value, and this is the value that you get in the expenditure method. Okay. So there was a question in 2020 on this equation. Prelims question I'm talking about. So if you remember this equation, C plus I plus G, you can solve the question. It was simple. In the expenditure method of calculating GDP, which of the following are included? Simple question, remember. In the expenditure method of calculating GDP, which of the following are included? Option A, consumer expenditure. Option B, imports. Option C, investment. D, government expenditure. Or it was not government expenditure, it was capital expenditure by the government. Capital expenditure by the government. These were the four options. And you would have options and options. Like for example, one would say 1 or A, B, 2 would say A, C, D, 3 would say C and D, 4 A, B, C, D. You remember that equation, you know what each and every letter means, you can solve this question. Simple. What is the answer? D. Very sure? I'll repeat the question. Think over. In the expenditure method of calculating GDP, which of the following are included? Imports are not included. We are subtracting the imports. Okay, see, you know it, but you're just getting played by the words. Simple. Okay, we are not including. If it is like plus M, then we are including the imports. We are excluding the imports, right? It's minus M. We are excluding the imports. So imports are not included. Simple. This is one way. If you remember the equation, then you can solve this. Without remembering the equation also, you can solve this. Pure logic. What is the definition of GDP? Produced in the country. Why will you include imports? Maybe this is the expenditure method of calculating GDP, but at the end of the day, this is also GDP, right? Why will the GDP include imports? Pure logic. So eliminate import, you get the answer. Simple. Understood? Everyone? Yes? Now, few terms to remember. Any other topic that we mentioned in the index? What else did we mention in the index? Okay. GDP growth versus GDP growth rate. Okay. Before we get there, make a note of some of the terms. Circular flow of money. That's all is the income method. Now we know what is GDP. Now we know what is GDP. Okay. The next term is GDP per capita. GDP per capita. What is GDP per capita? When you divide GDP by the population, you get GDP per capita. GDP divided by the entire population will give us the value of GDP per capita. Okay, now two very important terms to understand. Before that, out of the three things that we discussed, factor cost, basic price, market price. Okay, three things that we discussed: factor cost, basic price, market price. Which one do you think reflects the present nature of the economy? Market price. Okay, so which means out of these three, market price is more inclusive. Correct? Market price is more inclusive. It includes the taxes, it subtracts the subsidies, it includes the product taxes, production taxes, everything included. So market price is the best. Agreed? Now, from the current prices versus constant prices, which one is good? Which one reflects the actual nature of the economy? Constant prices. Okay. If we just look at, if you calculate GDP, you can calculate GDP at factor cost, you can calculate GDP at basic price, you can calculate GDP at market price, you can calculate GDP at current prices, you can calculate GDP at constant prices. All this can be done. At the same time, you have GNP, also be calculated at factor cost, basic price, market price, current prices, constant prices. You have NNP, can also be calculated with all these. Which one of these reflects the actual GDP? GDP at market prices at constant prices is what we calculate to find the actual GDP of a country. How do we do it? Value addition method, expenditure method. What do we calculate? We calculate GDP at market price at constant prices. Very important term to remember. Which will be higher? Market prices will always be higher because it's talking about the market price. It includes basic prices, it excludes taxes, includes subsidies, everything is included. So market price is something that you are paying to buy a good in the market. So that is the market price. So always market price will be higher than the factor cost. Yes, understood, everyone. So before 2014, this is what we were using to calculate GDP. GDP at factor cost at constant prices. But what happened after 2014? Narendra Modi became the Prime Minister. Market price at constant prices. Yes, understood, everyone. Now, one more. What if we take GDP at market price at current prices? GDP at market price at current prices. Here we have constant prices, here we have current prices. What will be the difference? Current prices, the rate will increase. Why? What will we take into consideration when the price fluctuates? What do we call it in economic terms? Inflation. GDP at market price at current prices are called as nominal GDP, whereas GDP at market price at constant prices is called as real GDP. Once again, GDP at market prices at current prices, which includes inflation. Remember the chart that we wrote, egg wala example, 1 rupee, 2 rupee, 4 rupee, 8 rupee. That change in the prices, if you include and calculate the GDP for 1 year, taking the prices of that particular year, we call it as nominal GDP. If you take base price, base year's price, for example, in the egg wala example, we took 2015 as the base year, where the price of an egg was 2 rupees, and we calculated the GDP, and that you take it as a constant prices, it is called as real GDP. Everywhere from now on, you hear these two terms, nominal versus real. Nominal will take inflation into account. We'll talk about inflation. Real will not take inflation into account. Okay, standard definition wherever you find nominal and real. Nominal GDP, real GDP. Nominal growth rate, real growth rate. Okay, so this is a constant thing. Nominal will take inflation into account. Real will not take inflation into account. Understood? Everyone, will take a break of 10 minutes. Clear? Go out. I know it's a lot of information. Okay, and a lot of complex things to understand. Revise everything that you have written on your own. Try to recall the examples that we have talked about in the class. If you have any questions, anywhere, if you have not understood, anybody. Okay, so we are just left with half an hour of the class after this. We don't have much to complete in this particular chapter. Models, the methods of calculation GDP is done. Nominal, real is done. All I have to tell you is about something about GDP deflator. Okay, so because of that, we'll take a break, revise everything that you have written on your own. Clear? And if you want to have some discussions, we'll have some discussions after the break. Clear? Yes. People from offline, online, any questions? Went through
As you know, the product taxes are of 5, 12, 18, and 28.
product taxes, GST.
GST. And what is the percentage of production tax?
See, it's not a single percentage that we have for the production taxes.
Average percentage.
Depends. See, stamp duty is different, land revenue is different, professional tax is different. So it is not under a single tax called GST, right? See, every indirect tax has been subsumed under GST. So you have 0%, you have 5%, you have 12%, 18, and 28. Correct, for the products. But for the land revenue, you won't have a single platform. For example, if the land or an industry has been located in a rural area, you have a 12 to 13% land revenue. If it's in the urban area, it's 18 to 20% land revenue. Okay. At the same time, the professional tax is different for different professions. The stamp duty is different if you are in the tier 1, tier 2, or a tier 3 city. And it also depends upon what kind of the business are you into. If you are into MSME, heard of MSME? What is MSME? Medium enterprise. All the cottage industries that you see, a small industry somewhere here, okay, that will be called as an MSME. We'll come to it at the later part of our discussion. So if it's an MSME, then you will have more taxes being given out by the government. The government doesn't want these MSMEs to suffer a lot because of the taxes, so they'll have to pay less taxes. At the same time, if you have an MNC, then they'll have to pay more taxes. So like GST, the production taxes are not constant. They're not standardized. Like the product taxes, the production taxes are not standardized. It varies from place to place, business to business, type of your business to type of your business. Okay. Income method. Circular flow of money, households, and the industry. This is the same diagram that we wrote for the expenditure method also. But this entire expenditure is only one part, that is C plus I plus G. This C is this expenditure. In the expenditure method, you have the investment, you have the government investment, you have the government expenditure, you also have X minus M. So all this included will be expenditure method. Okay, but here in this circular flow of money, the households are providing what to the industry? They are providing service to the industry. What is the meaning of service? Factor service. What do? They just go there, work there. Expenditure by the government here is the government investment. Government is constructing roads, bridges. Government is giving you free rice. Government is making you travel free in Bangalore. It's giving you 200 units of free electricity. During COVID, government gave out free vaccination. How many of you paid for the vaccination? Paid for the vaccination. Was it not free? Okay, private hospital. See, if you just avail the government benefit in the government hospital, you don't have to pay. Most of us vaccines were free. Yes. So this is government expenditure. Okay, coming back to this. When you are providing factor services to the industry, and industry is giving you what? Income in the form of wages. What do you do with respect to this income? You spend. Spend to buy goods. Correct? So in the income method, the income that you are getting here, is equal to the expenditure that you're doing to buy goods. Yes, understood. Let's not consider how much you save, how much it is there in your mutual fund, stock market, share market. That's excluded here. That is the reason why this is not the most accurate way of calculating the GDP. The most accurate way will be value addition method. Okay, will be value addition method. So the income that the households get from the industry in the form of wages that will be used by the households to buy the goods produced by the industry. So this income will be equal to the expenditure that they do. So this is the income method. It is an assumption. See, this can't be really true, right? Because you won't spend every money that you get. You will save, you will invest. Correct? So we are considering this. If at all people do this, then we'll calculate it under income method. Understood?
As per the MP market price, you know that FC plus indirect tax, which is production tax plus product tax. What is direct tax?
What is?
Direct tax.
Direct taxes is the income tax that we pay. Okay, that we pay. Corporate tax is a direct tax. Corporate tax, like firm itself pays every year to the government. That's a direct tax. IT returns that we file, that's an direct tax. So we will go into details of taxation, direct, indirect taxes in a separate chapter of taxation. Okay, we'll get to know what do we have under GST, or what are the advantages of GST. Was there any significant development after GST? So we'll get to understand all that. As of now, just know that the direct tax are the taxes that you pay directly to the government. Okay, income. It is not added in the market price because it doesn't have anything to do with the goods, right? See, you buy an iPhone, you buy Golgappa, you buy Pani Puri, Bel Puri, doesn't matter to the direct tax. You get this much money from your salary, you will have to pay that. That's all. Okay. So what is a direct tax? You pay directly to the government, as a term itself says. What is an indirect tax? You buy something. You go to a restaurant. At the end of the bill, you have CGST, SGST included. Whom are you paying this to? The restaurant. You're paying to the waiter. You're paying to the cashier there. What is he doing? That's an indirect tax. Okay. So on the product, we will be paying the indirect tax to the company. Company will be paying the GST to the government. So that's an indirect tax. Direct is when you directly pay to the government. Okay, we'll get into the details of this in taxation chapter. If I tell you a term now, for example, if there is a term in the news, India's nominal GDP is around $11 trillion, whereas the real GDP $3.8 trillion. If at all this is a statement, don't go with the numbers. Okay, if at all this is a statement, can you differentiate between them? Nominal GDP and the real GDP. What will the nominal GDP include? Market price at current prices. Real GDP? Market price at constant prices. This is clear. So this is the most important concept because you will have this a lot of times in the news. Okay, this should be very much clear to you. What is constant price? What is current price? What is factor cost? What is basic price? What is market price? If this is understood, then this chapter is a cakewalk. There's only one complex concept to understand after this. That is real GDP. Nominal GDP is done. Growth rate and the GDP growth. If we understand this chapter is almost done. We can proceed. We'll move forward. Everybody have understood. Make a note. GDP growth versus growth rate. GDP growth versus GDP growth rate. How many of you have calculators with you? Mobile calculators will also work. Everybody will have. We'll use it here to have some mathematical calculations. Don't worry, you will not have this as a part of the exam. See, the part of the exam is just the concept. That's all. UPSC will give you a statement. You should get to know whether the statement is right or wrong. None of these calculations that we have looked at The Ashirwad Atta, egg, iPhone, nothing comes in the exam. Okay, you don't have to remember those calculations. Use the calculations to understand the concept. That's all. Okay, people from online, drop a message in the chat box. Yes, no. Yeah. Let's take. Let's take a student just to understand one of the example. If you don't find this convincing, then we'll go for one more example to understand what is GDP growth and what is GDP growth rate. Okay. First standard. First standard. The height of a child when he was in the first standard. What will be the normal height of a child? 3 feet. Okay, we'll take somewhere around 30 inches. Okay, 1 feet is 12 inches. Let's not get into the mathematics. Just go with the numbers. Numbers are more important to us now. Okay, 30 inches. Second standard, his height was 40 inches. Third standard, 55. Fourth standard, 60. By 10th standard, he's fully grown. Okay, 6 feet. 6 feet in the sense how many inches? 72. 1 feet is 12 inches. 6 feet, 72 inches. This is his height over the years. Progression. Done? Yes. Now, let's understand the growth. Let's assume in UKG, he was 15 inches. What is the growth in the first standard? 50. Growth is 15. Second standard? 10. Third standard? 15. Fourth standard? 5. This is fourth. This is 10th. Okay, ninth, let's take 68. 4. Okay, this is growth. If we take the same way, the growth of the economy from year to year, that is growth. We'll take it the next example. Understood what is growth? The actual numbers. If you convert this into percentage, that will be growth rate. 15 to 10. How do you calculate the percentage? The height was 30, height became 40. What is the percentage? Use your calculators. How do you calculate the percentage? 40 minus 30 divided by 40 into 100. 1 by 4 into 100. 40 minus 30 is 10. 1 by 4 into 100. 1 by 4 is 25. 25%. 55 minus 40 divided by 55 into 100. How much? 27, 9. Problem with the calculator or the phone? 27 point. We'll go with the majority. 27. 27.2. Okay. Next. 60 minus 55 by 60 into 100. 8.3%. Now 60 to 68. Let's take 68 minus 60 by 68 into 100. 11.76. Here, this is the growth rate. This is the growth. Understood? Everybody got this? How is this? This 15. This is just a number that I have given. That's all. Okay. Growth, this 15, it was in the UKG. First standard, he grew 30 inches. 30 minus 15 will be 15. This is first standard from where we have considered. I've taken one more, that is UKG, 15. So it became 15. Yes? Everybody understood? Now look at this. These three figures, look at these three figures. 25% to 27%. What is the change in the percentage? Which means GDP grew by 2.2% compared to the last year. That's what you will find the statement in the newspaper. From first standard to second standard, what is the growth rate? 2.2%. Growth was 25% in first standard. It became 27.2 in the second standard. So the growth rate is 2.2%. Clear? Now, it was 27.2. It became 8.3. What happened to the growth rate? Decreased. So the growth rate decreased. Did the growth decrease? What was the growth? Second standard it was 40. Third standard it was? Did the growth reduce? Growth rate reduced. Getting the difference? Everybody, repeat this again. The growth rate from UKG to first standard was 25%. How did we get 25? 40 minus 30 by 40 into 100 is 25. Numbers are not our problem. I want you to understand the concept. Okay. Growth rate was 25. Here the growth rate is 27.2. Okay. Between first and second, did this individual or this person X, a student, what is his growth? What is his growth rate? 2.7% is what he increased his height from. 2.2% is what the increasing in the height from first standard to second standard. Okay, so we would say that 2.2 is the growth rate from second standard to third standard. Second standard, 27.2 is the rate. Third is 8.3. It reduced. Growth rate reduced. Probably he was more into sports, or his father and mother were fighting too much, family problems, okay, psychological, emotional turmoil, okay, or maybe he got into a toxic relationship. Second standard, hypothetical example. Okay, this is you can connect. Yeah. Something happened, he was not getting enough nutrients, maybe there was COVID, he was suffering from dengue, all bad things happened to him when he was in second standard. His class teacher was not good. Something happened. Because of that, his growth rate reduced. Did the growth reduce? It was 40. It was 55. The growth is continuing, but the rate of growth is slowing down. Understood? Growth is continuing, but the rate of growth is slowing down. One more example. Let's take three places: Bangalore, Mysore, Bangalore. How many from Karnataka? Okay. How many from Bangalore? Okay. How many can connect to these places? Heard of these places? Mysore, Bangalore. Out of these places. Let's consider, I'm not getting into the actual numbers. The distance between Bangalore to Mysore is 150 kilometers, 120 kilometers. Let's take 150. Let's take Mysore to Mangalore is also 150 kilometers. You start 4 o'clock in the morning. You want to have a look at Mangalore. You're going on vacation. Okay, you start 4 o'clock in the morning from Bangalore. From 4, you have an express highway now, which says in 60 minutes you can reach Mysore. 5 a.m. you are in Mysore. What is the speed? Let's get some math. You want to travel 150 kilometer. You have traveled it in 1 hour. What is the speed? 150 by 60. Okay. See, what is the speed that we calculate? 80? 80? What 80? What is the unit? Per hour. Okay, 80 kilometer per hour. What does this mean? 1 hour. 80 kilometers you can travel in 1 hour. What if it is 100 kilometer per hour? What is 150 kilometer per hour? That's what you did here. If you can travel 150 kilometers in 1 hour, the speed is 150 kilometer per hour. Yes? No. Mysore to Bangalore, because 5 o'clock you stop. You want to have breakfast now. Okay, after having breakfast, you can't drive. Clear? So, Mysore to Mangalore, 150 kilometers, you take 2 hours. Because you've had breakfast. After breakfast, you want to stop for tea. Once all this done, you want to relax. And you don't have express highway. It's a Ghat section. You'll have to cross Western Ghats. Okay, because of all these reasons, to travel 150 kilometer, you will take 2 hours. Now, what is the speed? Very good. 75 kilometer per hour. Now, if I ask you to compare the difference in the speed from first travel to the second travel, do we say that the speed is double here? Clear? If you take speed as 100%, here speed is 50%. Yes. What happened to the speed? Decreased or not? Decreased. But what happened to the distance? You're still traveling. You're not coming back. From Mysore to Mangalore, you're traveling. But the space at which you're traveling has reduced. This is the same case with the growth rate also. You will be growing, but the pace at which you grow will slow down. Here you are traveling at 150 km per hour. Here you are traveling at 75 km per hour. After Mangalore, if you want to go to Udupi or Karwar, you will take 3 hours to travel 150 kilometers because there you will have more traffic then. Here we are talking about 4 a.m. to 5 a.m. where you will not have much vehicles. So you could travel it in a good pace. 150 kilometers is a huge speed, the two Indian roads we are considering. Okay, so there the growth rate from Mangalore to Udupi would be somewhere around, if you take 3 hours, it would be somewhere around 20%. The speed has reduced, but still you're moving. The distance you're covering is still there. The distance you're covering is more. Okay, but the rate at which you're covering the distance is low. Understood? Everyone? Yes. One more example. Let's take the real example of growth now. If I tell you this, the first thing, then probably you would not be in a position to understand. Now you can make sense out of it. So 2012, 2014, 2016, 2018. 4 years, or we can make it consecutive. We can make it 3, 4, 5. Okay. The GDP of the country, let's not get into product prices, multiply it. Let's not get into that. That is nominal real is already done. I hope you've understood. Yes, nominal real. Or we'll do it again. Yes, no. Yes, no. No, okay. 2012, the GDP was 100. 2013 GDP is 110. 2014 GDP is 125. 2015 GDP is 123. Okay, tell me the percentage. 110 minus 100 by 110. 0.09 into 100. That will be 9%. Which means Indian economy from 2012 to 2013 has grown at a pace of 9%. Huge number. Anything above 6% growth is good for India. Anything above 6%. Okay, if we clock double digit growth, that's what we aspire for. We want double digit growth. Okay, 10%, 11%, 12%, which means India is doing great, the best. Okay. Now, second, 125 minus 110 by 125.
12%.
How much?
12%.
12. Now, 123 minus 125 by 123. Minus
Minus 1%.
1.6%. Okay, in between we'll take one more just to make you understand things. 128. Okay, 128 minus 125 by 128. What is it? 2.34%. Now look at these three numbers. 2012, the growth is 9%. 2013, it increased to 12%. What can we say? From 9% to 12%, from 2012 to 2013, Indian economy expanded. The growth rate increased. Did the growth rate increase or not? GDP is also increasing, 100 to 110. That is GDP. This is GDP growth. Okay, this is GDP growth. This is GDP growth rate. What is the rate at which the GDP is growing? It was growing at 9%. Now it is going at 12%. It expanded. Acceleration. This is what we call as accelerating GDP. It's accelerating. Correct? Now, this is more important. 12% to 2.34%. What happened to the GDP growth rate? What decreased? GDP growth rate decreased. Growth rate decreased. What happened to the GDP growth? From 110, from 125 to 128, it did increase. But the rate at which it increased is lower compared to what? At the previous year. Agreed? Understood? Now, the last thing. 123 minus 128 by 123. This figure. Minus 4.06%. What do we call this as? From 100, it became 110, 110 to 125, 125 to 128, and at 128, it was COVID-19. After COVID-19, we had lockdowns. When there were lockdowns, no business operated. None of you traveled. Fuel was saved. You did not eat outside. So you saved that money also. And Pani Puri wala, Bajji wala did not get income. You did not go to Kalpavruksha to buy rotis. Ashirwad also felt losses. The farmer also had losses. Everybody were in loss. Because of that, the GDP contracted. Here the GDP expanded. Here the GDP contracted. What is the rate of contraction? Minus 4.06%. Between this 125 to 128, the growth rate slowed down. It was growing. 125 to it became 128. It was growing, but the rate of growth slowed down compared to last year. From 128, it came to 123. Okay, it did not grow, rather it reduced. What is the rate of reduction? Minus 4.06%. Understood? Everyone. So get to know the difference between GDP growth and growth rate. Very, very important. UPSC will always confuse you with these two terms because these are a bit difficult to understand. Okay. Now, when you start listening to these examples, you might feel like, okay, I've understood. After you get out of the class, start thinking about this in the evening or tomorrow. You'll be like, what is growth? What is growth rate? The only difference is rate. I'm not getting this. You will have these feelings. Anytime you feel this, you're not understanding, make it a point the next day you come and meet me. If you don't, then it's a disaster. Because you don't understand these 4 or 5 chapters, each and every keyword, then it becomes difficult to understand economics. Really difficult. Okay. Yes. Now. We'll understand one more thing in this itself. Write down a subheading called as base effect. BASEEFFECT. Base effect. How many of you have younger or elder siblings? And how many of you think that your siblings are better than you? Okay. For example, any 2 names of you and your siblings? Anybody? Volunteers? Okay. Shweta. And? Can you please spell? Okay. We'll take these 2 people into consideration. To what? To understand base effect. Okay. Now let's take. In the first standard, Shweta scored 90%. Okay, let's consider them to be twins. Let's consider them to be twins. They're in the same class. Okay. So Shweta scored 90%. Subhranshu scored 95%. And they get the marks card to the parents and they show. What will the parents do? Compare. Who will be very happy with, who is a child who can make the parents very happy? Obviously, Subhranshu can make them very happy because he's got 95. Okay. Shweta, what is her comparison with? Subhranshu, who has got 95. Okay. Now, first standard. And now Shweta is very angry. Even she wants to prove that even I am your child. Okay. So, second standard. Shweta scores 95. Subhranshu scores 80. Gone case. Okay, that entire year for this person, it's a hell. Okay, always. What is the comparison with? 95. Okay, you've got 80, you've got 95. Okay, now let's get to third standard. Very difficult, and they're being more exposed to mobile. They're playing games around, they're watching cartoons. Okay, they're going out with friends. Okay, all this is happening by third standard. Okay. Now, because of all this, Shweta got 50, Subhranshu got 55, and he is the topper of the class. Now, if parents scold him, you've got 55, he would say, I am the topper of the class. Yes, this is called a base effect, which means the previous value will decide whether your value today is good or bad. The previous growth rate of the Indian economy will decide this year's growth rate is good or not. What did it decide here? Who is the topper? That decided whether Subhranshu or Shweta is good or bad. That was the base. But here, he was the topper with 95. Even here, he is the topper with 55. So parents are happy. Correct? The base reduced. The same concept, when we apply it to the Indian economic growth, 2012, 2013, 2014, 2015. Okay. 100, the GDP was 100, 13, 108, 14, 109, 15, 114. This is the GDP, let's take. Now let's get to know the growth rate. What is the growth rate? 108 minus 100 by 100, 8%. Okay. Now 109 minus 108 by 109 minus 108 by 109. Okay. By 108. Now tell me what is the number. Zero 0.91, which means 9.1%. Okay. We'll do it from the first. 108 minus 100 by 108. How much? 7.4. 109 minus 108 by 109. 0.9%. 114 minus 109 by 114. 4.3%. Yes. Now, what is the growth rate from this to this? Did it grow? Slowed down. How much? 6.5%. Slowed down by 6.5%. 7.4 minus 0.9. Okay. Now, what is the growth here? How much? 3.4% is the growth, the difference in the growth rate from 2014 to 2015. Okay. If you look at these two numbers, 108 to 109, the growth rate is very slow. That is 0.9%. Okay, growth rate is very slow, 0.9%. If you look at this 109 to 114, the growth rate is 4.3%. This 4.3% is with respect to what? The previous year, 109. If you have this low, the comparative to what are you comparing? If you have this very, very low, then you would say that 4.3 is a very great growth rate. You would forget that you were growing at 7.4 the year before. What you will take into consideration? The previous year where you have grown 0.9%, and the Prime Minister would say, last year when Congress was ruling, the growth rate was 0.9. Now BJP has taken over and the growth rate is 4.3. And we don't know what is base effect, and we believe whatever people say. Okay. So to calculate such base, we need one base year. That's what is 2012 and 2013, which is a base year for us to calculate our GDP. Again, constant prices. Okay. So during the COVID time, the entire economy contracted. There was no concept of growth rate at all because the economy contracted. After COVID, 2021 till 2022 and 23, when you compare it with the COVID growth rate, obviously the growth rate will be great. will be more. That is called as base effect. Because of the previous year's reduction in growth, you can make a note of this. The reduced growth rate in the previous year, the reduced growth rate in the previous year okay, the reduced growth rate in the previous year will make the growth rate of the present year, the growth rate of the present year to look as if the economy is largely expanding, okay, that is base effect. Understood, everyone? Yes. Okay. The last concept of national income. Let's put to work everything that we have studied to understand this. We have studied GDP, GNP, NNP, NDP. Okay. Now, I'll give you two examples. How many of you are great fans of IPL? How many of you watch IPL? Any RCB fans? Okay. If I ask you two greatest players in the RCB, AB de Villiers, Virat Kohli will take. AB de Villiers, Virat Kohli. Okay. Suppose RCB management has paid 15 crore rupees to AB de Villiers and 15 crore rupees to Virat Kohli. What will Virat Kohli do with this money? Don't tell he'll buy something for Anushka. Of course, that is there. But still, apart from that, what will he do with the money? Invest. Okay, where will he invest? Stock market. Okay, agreed. Maybe agreed. Stock market. Fixed deposits. What else? Property. Okay, he'll buy some plot in Bangalore or he'll buy a farmhouse somewhere. Agreed. What else will he do? Cars. Okay, he'll buy some cars. Apart from that, he'll go out, eat, enjoy, vacation, do something. Don't you think out of this 15 crore rupees, around 12 to 13 crore rupees he's spending in India? In India, he's spending. What about AB de Villiers? What will he do with 15 crore rupees? Do you think he'll buy stocks in Indian stock market? He'll invest in Bangalore? What will he do? He'll take back to South Africa. Possible. So out of this 15 crore rupees, AB de Villiers is taking back 13 crore rupees to South Africa. Correct? What is more beneficial for the Indian economy? That is why there is a cap of only having 4 foreign players in IPL team. Okay, because economy has to grow, right? Now think about one more. Do you think this is loss for the economy? Not a loss for the RCB, but loss for the Indian economy, which are very much detached from cricket. Yes, agreed, understood, everyone. Now, if Virat Kohli is going out, let's say he's playing in Big Boss League. Where's Big Boss? Australia. Okay, Big Boss. He's playing, it's like the same IPL of Australia is Big Boss. So he's also playing in Australia. And they're giving him 20 crore rupees. Correct? Okay, before that, tell me, will this be included into Indian economy or Indian GDP? GDP calculation? Of course, it will be included because it's happening in India. It's a part of GDP. Will this be a part of GDP? Why? This is also happening in India. Territory is more important in GDP, not the nationality. AB de Villiers is an Indian, Pakistani, Afghanistani, South African, doesn't matter to us. This transaction is happening in India. So this will be a part of our GDP. That's a different story, that this is a loss for us, loss for the economy. But still it will be included in GDP because it's happening in India, in the territory. Okay. Virat Kohli is playing in Australia Big Boss. They've given him 20 crore rupees per year. What he'll do? 2 crores he'll spend there, rest 18 crore will bring it back to India. Will this be included in Indian economy? This is not a part of the GDP at all because this transaction is happening outside. This will be a part of GNP, gross national product. You have plus NFIA. NFIA. So when you have written that, under that, make a note of one statement plus NFIA under G. Everybody understood this example? So what is more beneficial for the economy? AB de Villiers playing in India or Virat Kohli playing in Big Bash? What is more beneficial for Indian economy? What is more beneficial? Indian economy as a whole. Let's not consider GDP. Virat Kohli playing in Big Bash is more beneficial for the economy, which is not included in GDP, which means GDP calculation is flawed. It will include something which is not to be included. It will exclude something which should be included. Yes? Correct? Okay. So with this, make a note of the statement under GNP, gross national product, includes all the goods and services, produced by an Indian national, which means a citizen, an Indian citizen, anywhere in the world. This is the inherent meaning of NFIA, net factor income abroad. GDP plus NFIA, this is the formula that you have written. What does this NFIA mean is this. Even if you are earning away from India, that will be a part of GNP. So now tell me, is GDP a better way to calculate the national income or GNP is a better way to calculate the national income? GNP is always a better way. We'll keep it that way. GNP is a better way. GNP is always greater than, I'm not telling on the terms of the quantity, but the utility. GNP is good or is better than GDP. Okay, now Virat Kohli, when he's traveling to Australia, he'll lose his sleep, he'll suffer from jet lag. The food that will be, that's a different story, that he'll not travel in economy, he'll always go with business class or his private jet, but still he can't control sun and moon, right? He will have to suffer from jet lag. Okay, and he'll lose his sleep cycle. Because of his sleep cycle, 2 or 3 days his performance would get reduced. He'll have to put in some extra effort to come back to track when he's playing in Australia. There'll be a change in weather. He can't eat the food cooked by Anushka. So you'll not, though it will be delicious, it'll not be filled with love, which means some nutritional deficiency can also arise. Because of that, he might fall ill. All these externalities. Because Virat Kohli is traveling to Australia, can we consider this as depreciation? Should we remove this? Because this is not adding. It is not adding to his performance. When you remove depreciation from GNP, what do we get? Now tell me, is NNP a better way or GNP a better way? We'll give you an actual quantity. It's always NNP. So NNP is always a better way than GNP, GDP, and NDP. Yes? Now, we have studied 3 costs: factor cost, basic price, market price. Okay, out of these, factor cost, basic price, and market price. Okay, out of these 3, which one do you think reflects more on the cost of production? Cost of production. We're not talking about taxes, we're not talking about subsidies. Those are not the costs of production, just the cost of production. Factor cost. Basic prices will include production taxes and exclude production subsidies. The market price will have the product taxes and remove the product subsidies. That is not the cost of production, actual cost of production we are taking into account. So NNP at factor cost is nothing but our national income. The purest way or the truest way to find out the national income will be NNP at factor cost. So you don't have to remember any example of Virat Kohli, AB de Villiers, Chris Gale, Australia, Big Boss, IPL, nothing from the exam. All you have to remember from the exam point of view is just this. National income means NNP at factor cost. If I tell you that statement, will you agree? You'll ask me why. Why not GDP? Why not market price? Why not NNP? So I took an example of RCB and Virat Kohli. Understood? So from the exam point of view, make a note of this. National income is nothing but NNP at factor cost. Okay, now fine, this is the national income. What is personal income? This is something that the country is earning. NNP at factor cost is that country is earning. What is personal income? How much are we earning? Individuals. Personal income. We have to subtract something from the national income. That is, personal income is equal to NNP at factor cost, which means national income minus. Now let's take Virat Kohli. Virat Kohli was got 18 crore from Big Boss. He's bringing all those 18 crores in 3 or 4 huge bags. Okay, he's carrying it and he has bought it to his house. It's there. Out of that 18 crore, will he invest everything? No, he'll invest somewhere around 3 to 4 crores. Okay, and will he buy cars with the entire money? No. Okay, he'll buy car with something and he'll keep something. There will be 1 or 1.5 or 2 crore rupees that Virat Kohli would keep in his bank account, savings bank account, or a hard cash in his wardrobe. Yes, emergency situation. So we call it as, see, 18 crores he has got into the Indian economy. Correct? How much is actually invested in the form of stocks, gold, property, car, food, Anushka's gift, everything included? 15 to 16 crore rupees. What happened to the other 2? Undistributed. He has kept it for himself. Yes. So like that, from the national income, for all the firms, the corporates, even they will have some income that they would have reserved for the future. They have not distributed. They have not. It's not a part of the trickling down effect or the invisible hand. We've talked about trickling down effect last class. Invisible hand. Yes. So the corporates have not invested money into the market. They've kept it for the future use. So that is called as undistributed profits. Undistributed profit. National income, if you subtract undistributed profit from the national income, NNP at factor cost minus. What if you have taken loan and you want to pay interest on it? Will that be a part of your income? Because you're giving it away to the bank. That's not a part of your income. Minus net interest payments. You have given loan to someone, you're getting interest. You have taken loan, you are paying interest, whether it is positive, whether it is negative, doesn't matter. Net interest payments. That's not a part of your income. You will have to give it. Okay, net interest payments. Next, if at all, Indian government, mixed economy, very good, thinking about the welfare of people, not like USA. The government decides for every individual's bank account, we will deposit 2,000 rupees. Is that your income or not? That is your income. You can withdraw it whenever you want. Yes. So that is called as transfer payments. Transfer payments. Something that you get for free from the government. Unemployment allowance. Unemployment allowance. The youth in Karnataka are also getting unemployment allowance. That's the guarantees of the present chief minister. Okay, that is transfer payments. Or you get some scholarships. That's also your income. You get 10,000 rupees or 20,000 rupees when you're doing your graduation. You get some scholarships. Scholarships, unemployment allowances, widow allowance, allowance for senior citizens. So everything comes under transfer payments. Okay, so when you subtract these things from the national income, we get personal income, and this equation is very important. National income minus undistributed profits minus net interest payments plus transfer payments will give us the personal income. Okay, now one more concept: personal disposable income. What is disposable income? Something that you can spend the way you want. You don't have to be accountable for this spending. Even if you spend, nobody will prosecute you. That what is that amount of money that you will have, that you'll be left with after you're done with all the payments? You've just paid interest on the loans. You have not paid taxes. You've not paid taxes. Now, personal income minus direct taxes. Personal income minus direct taxes minus non-tax payments. Let's take the personal income is around 20,000 rupees. You'll have to pay a direct tax of, let's say, 500 rupees. Clear? Done. What are these non-tax payments? What else you will have to pay if you get a 20,000 rupees salary every month? What all the things that you have to pay standard? You can't compromise on it. IT is done 500 direct taxes. What else?
Insurance.
Okay, it's a thing. If you want to pay the insurance, you can pay. If you don't have to pay, you can't pay. EMI, okay, that you have paid in the interest payments. House rent. If you are living in a own house, if you have taken loan for its construction, you will have to pay EMI. That's a part of net interest payments. If you are living in a rented house, then you'll have to pay rent. You have to pay electricity bill. If you're not from Karnataka, then you'll have to pay electricity bill. If you are in Karnataka, then government will give you for free. It's not even 200 units. What they've done this time is that they've taken the average of last 10 months electricity usage, reduced 10% from it, and they've fixed the slab. Okay, for example, last 10 months, let's say you have used 110 units of electricity every month. They've reduced 10% from it. So somewhere around 101 unit will be your slab. If any month going forward you use less than 101 unit of electricity, then it's free for you. The time you use 102, you'll have to pay for entire 102. Okay, this is the scheme. So don't be of the assumption that the electricity is for free. I can use it the way I want. If it crosses that 101, then you have to pay for the entire 102. And this 102, the new slab, is very expensive. Very, very expensive. Okay, so you will end up paying almost double. Okay, so this is the scheme. Okay, rent. What else? You won't drink water. You won't take bath. You'll have to pay for BWSSB, water bill, electricity. How do you travel from your house to petrol? These are all under non-tax payments. So let's take all this included will be 5,000 rupees. What is now personal disposable income of yours? 20,000 minus 500 minus 5,000. 14,500 rupees. You can just go to UB City, have fun, enjoy, go to House of Commons, go to Sherlock's, do whatever you want, nobody will ask you. That is personal disposable income. Understood? Yes. So with respect to national income and personal disposable, the formula is important. So UPSC will just give you a statement, which of the following are included in the fund in the national income, which of the following are included in the personal disposable income, which of the following are excluded from the personal income. That way you will have the statements, you'll have 4 options to choose from. Okay. Last concept, not an important thing from the exam point of view, but just for an information. What was the status of GDP calculation before 2015 and what happened after 2015? Okay, before 2015, one thing that we know, the GDP was calculated with factor cost. Okay, factor cost at constant prices. Now it is market price at constant prices. Second, the number of companies or the number of corporates that was taken into account for the calculation of the GDP was around 2.5 lakh firms before 2015. 2.5 lakh firms were taken into consideration while calculating GDP. Indian firms, GDP, only Indian firms. Post 2015, it increased to 4.8 lakh firms. Who does all this job? No, including and excluding the firms. Any ministry for the corporate? MCA, Ministry of Corporate Affairs. Okay. There is one registry called as MCA 21 registry. So MCA 21 registry has all these 4.8 lakh firms whose data is considered to calculate GDP. So before 2015, third point, we used expenditure method, but now we use value added method. Yes. Done. On a scale of 10, how much do you rate the understanding of this chapter or difficulty of this chapter? 6, 5, 2, 1, negative, 8, 7, anything above 5. 5 and above 5, you need a couple of revisions. Make sure you don't have class tomorrow. Okay, just current affairs, right? So Sunday you will not have a class. You don't have a class. Okay. Don't make any plans. Make sure you complete this chapter from the class notes and also Nitin Singhania. For the first chapter, refer only the class notes, more than enough, because those are just basics. Clear? This is something that is important from both prelims and mains point of view, because there has already been a mains question. Okay, so you can look for the mains question. You can write down because we have covered that topic. Okay, the next class, remind me once to explain you about the way or structure to write an answer. Clear? So going forward, whenever we have such mains questions coming forward, I'll give you questions in the class, and we'll discuss the introduction, body, and also the conclusion. I'll tell you the theme of the answer, like what should the introduction be, what should the body be, what should the conclusion be. Then you can write. I'll give you some time at the end of the class, like 10 minutes, to complete the answer. Okay, we'll do that going forward. Clear? So as of now, keep in mind the main motto is to enrich your content. Content is the king in this particular exam. If you have content, you can play around it like anything. You can literally play around the content. So the first thing that you will have to do for the next 3 to 4 months is to grab as much as content as you can. Don't take it wrong and start reading multiple sources. Read, revise the same source again and again. Okay, do the class notes again and again. Okay, and try to solve some previous year's questions. We'll do it in next class or the next class sometime. And that's it for this week. We have completed this chapter. So next chapter, Monday, we'll take up inflation. Okay, we'll do it during the inflation. We'll do it with inflation because it requires some bit of information of CPI, WPI and all. So we'll do it there. Okay. Anything else? Any more? Transfer payments are something that you get for free. Scholarships for your college. Okay. Or because you belong to some particular group of community, some caste, some tribe, or some regional language you speak. Okay, you have that privilege, and the government will allocate some funds for you. And government will construct some hostels for you where you can go study. Even that's a transfer payment. Okay, or because you are into some family background, because your father or mother was in army and he's injured. Okay, and you will get pension. Pension is also a form of the transfer payment. Here, so from the government side, anything that you get for free in the form of cash that you can use is transfer payment. So this will get added to your income. This will get added to your income. If your income is 20,000 per month and you get 5,000 a scholarship every month, so your income would be 25,000 a month. Okay, that is transfer payment. Transfer is the government is transferring you a payment. That's all. This is transfer payment. So your father and mother is giving you pocket money every month, transfer payment. But you can't include it in the GDP, that's all, because it's unaccounted. Are you giving receipt for your father or mother for giving you pocket money? If they're doing it Phone Pay, Google Pay, of course it will be there. If they're giving you cash, you're not giving receipt, right? So then it's a part of black money. Then all of you are having black money, unaccounted. Okay, so that is also transfer payment. And you're not paying interest on that income. So that's below the slab, but still that's unaccounted. Yes. Anything else? No? Too much of information? Read it not once, twice, thrice, 5 times. Let everything that you have written in the notes be on your fingertips. Okay, that is the level of expertise that you should be in, because you don't have a lot of time for your prelims. Okay, you can't afford to waste days. You just have 9 months, 9.5 months to be specific. So if your 24 is your first attempt and you're very serious with the preparation, I hope so. Okay, so you should not be wasting days. Every Sunday, half a day, let it be a break. Do not even think about UPSC every Sunday. Live a life of a normal human being on Sundays. Okay, that too half of the Sunday, or at least the complete Sunday as of now. Going forward, you will have tests on Sunday, so you can't take breaks in the first half of Sunday. Second half, of course, you can take breaks. So plan your breaks accordingly. If you don't plan your break, then it becomes a disaster. Clear? Yes. Take care. See you again